Hi guys, how are you all? Today we're going to see an interesting and important topic which is the stock market. In this video we'll see what is a stock market is, how we can trade and what are the things we can do. So first we'll discuss about Indian stock market and then how to buy American stocks from India, and we'll see the advanced stock market trading. So first we'll see why we need to invest in a stock market. As you know, day by day many things are changing, and in 20th century it used to be different. People used to do government jobs and they used to get pension, and the money which they used to get is sufficient for them and their family. But now everything is changing. The inflation rate has been increased to 4 to 5%, and if you store your money in the bank for your later on purpose, the money will be same, it won't increase anything, but the prices will be increasing, like the fuel and food and everything. So everyone must invest in a passive income, and they should think about retirement plans even though they are in their 20s. So here some of the investment types we'll see are: you can invest in gold. We can see gold is increasing a lot these times in 2020. At present the price of a gold per gram is around 5300. It used to be like 2000 rupees. And real estate, it's also increasing in a good amount. Like the prices of real estate is like double and triple. But for these two, for gold and real estate, you need minimum certain amount of money. For real estate you should need in lakhs, and gold, if you want to buy 1 gram of gold you need 5000 rupees. But in stock market you can start with just 10 rupees. And fixed deposit, you need to hold your money in any bank for a certain amount of time, and you can get 6% to 8% interest rate. And we have government bonds, mutual funds, savings account. It's one of the easiest and slowest interest rate, which you will get like 4%. Some banks are giving around like a 6%. So the average return of Nifty 50, Nifty is a index fund for NSE. So the average return in the last 15 years is 12.8%. And if you check the American Stock Exchange Standard & Poor 500, it's 10% interest rate, which is very higher than the fixed deposit, any other things like a savings account. So we'll see what are the stock exchanges we have in India. BSE, it's a Bombay Stock Exchange. It's oldest stock exchange in the Asia. It was started in 1865 by East India Company. But later on, normally if you're buying a stock from any exchange, they'll ask you to select if it's from a BSE or NSE. 99% of the people buy it from NSE because it's a digitalized and updated stock market. And for buying stocks you need brokerages. There are many private brokerages in India. Some of them are Zerodha, Upstocks, Grow, etc. If you have a bank account, you can start using your bank brokerage like SBI, Standard Chartered, ICICI, but they charge minimum like 20 to 30 rupees for every like a transaction. Like if you buy or if you sell, they'll charge you. But these brokerages doesn't charge you those prices. And the other thing we'll see is dividends. Dividend is if you are holding any company stock for every quarter of the year, like for every 3 months, the company issues a dividend. Like if you have a stock of 200 or 300 rupees, they'll give you 8 rupees to 20 rupees every 3 months. So it's like you are holding a stock and the stock price increases, and in the added advantages you are getting a dividend. So it's like an extra advantage which you will get when you're holding a stock. Splits, when a stock price increases to around 2000 rupees, 3000 or 5000, the people will show less interest to buy it. More people wants to buy the stocks which are around 100 rupees, 200 rupees rather than 2000. So company will divide the stock into certain small portions. Like if a company stock is like 2000 rupees, they will divide it into 5 stocks by each having 400 rupees. So if you multiply 400 into 5, it's gonna be same 2000 rupees. There will be no change in company financial sheet or anything. But as the price of the stock decreases, more people will start buying it. So it helps company in the long run. So here we'll see some of the different companies which has a huge growth in the last few years. We used to hear from many people like if you would have invested 10,000 rupees like a 10 years ago, you would have got 1 lakh or 5 lakh by now. Some of the companies we can see here are Jubilant Food Works. The food companies like Domino's and all these are managed in India by Jubilant Food Works. You can see it started just 10 years ago with 115 rupees and now it's 2567. So it increased by 2500 percentage in 10 years. You can see it's a huge growth. And many growth companies that doesn't give a dividend. Here you can see they're just giving 0.23. Some companies they'll give dividends even though they are growth companies. Here you can see one of the company which fell down in the past 10 to 15 years. Like before buying a share of a company, should do your own research before buying. You can see Reliance Communications, which is by Anil Ambani. It started in 2006 at 300 rupees. You can see now it's at 1 rupee 55 paise. And when you compare it to the Reliance, Mukesh Ambani's Jio, you can see it started at just 53 rupees 18 years ago. Now it even went to 2300. So you must be humble in a stock market, should be patient. You shouldn't be like invest today and get profit tomorrow. It must be watching a grass grow. It takes a lot of time to get a company into a good profits, but there are many companies which has a risk and they give you a reward too. If you have a high risk, you will get a high reward. Now I'll show you some of the stock brokerages and the portfolio which I own. Here we have Upstocks. You can see this is the Nifty index. It used to be in 12,500 by the end of the last year and it fell to 9,000 in the March and it came back to 12,800, ready to reach 13,000 in just 10 months. You can see how big the growth of India is increasing. You can see here, and here you can see some of the holdings which I hold, which I bought like 3 to 4 months back, and some of them I bought recently. Here you can see the overall profit. They'll show you HDFC. I just bought one share and it increased 318 rupees. 30% growth in like 3 to 4 months. You can see HDFC is the biggest private bank in India. This is just in 3 to 4 months. You can think about the growth in next 5 years. And you can see some of the other, like the banks are growing incredibly. Here you can see IndusInd Bank 60% profit. Axis Bank. SpiceJet, you can see 40% growth. Indigo has the biggest growth in the airline stocks. 40% growth. It increased from 1200 to 1600 during the time of Corona. It fell down even to 800 to 900. And one of the other biggest growth companies, Reliance, you can see I just bought it recently. But if you want to keep it for a long term, Reliance is the best company to hold. Here you can see this is Zerodha Kite platform. If you want to do technical analysis or anything, you can use this. It's the best. You can apply here RSI, 50-day moving average, 100-day moving average, everything, and you can use it to do day trading for a long term. So if you want to invest for a long term, just invest 2,000 or 3,000 for every month in consistency and leave it for 5 to 10 years. So you will get a good profits after that. Don't withdraw it in the meantime.